You ever get that weird feeling when everything seems off all at once? Like the kind of day when markets go silent, numbers look ugly, and nobody's really sure what's going on, but everyone knows something big is happening? Yeah, that was this Friday. Now, picture this. You're watching the markets like usual, trying to make sense of what's next, and then, boom, total blackout. Not literally, but close enough. The main stock index in Brazil just froze. For over 3 hours and a half, nothing moved. No numbers. No updates. Dead silence. And when it finally came back, well, it wasn't good news. But before we get to that, let me take you somewhere else for a second. Across the ocean in the good old US of A. Because that's where the first domino fell. Every first Friday of the month, investors hold their breath for a single report. The payroll. It's the main job creation report in the US, and it basically sets the tone for everything, from interest rates to stock prices to global market sentiment. And this time, it was ugly. The U.S. economy was expected to add 110,000 jobs in July. You know how many it actually added? Just 73,000. Ouch. Even worse, the past months were revised down, meaning previous job numbers weren't as strong as people thought. So what happens when the world's biggest economy shows signs of slowing down? Traders start betting big on one thing: rate cuts. Yep, Wall Street suddenly started pricing in not one, but two interest rate cuts by the U.S. Federal Reserve, and possibly starting as soon as September. Now you're probably thinking, okay, but isn't that good news for stocks? Well, yeah, usually. But Friday was anything but usual. Back in Brazil, the dominoes started falling fast. First, the dollar plunged. We're talking a solid 1.01% drop, closing at 5.54 Brazilian reals. And for the week, it ended down 0.3%. Why? Same reason. That weak U.S. job report spooked the dollar worldwide. And suddenly, currencies from around the globe, from Europe to Latin America, started gaining ground against it. But here's where it gets weirder. Even with the prospect of rate cuts, which should be great for risk assets, the stock market's tanked. New York, all red. Dow Jones, down 1.23%. S&P 500, down 1.6%. Nasdaq dropped a brutal 2.24%. Investors weren't in the mood to celebrate. In fact, they were running for safety, shifting from stocks to bonds. Treasury yields collapsed. And in Brazil, like I said, it wasn't pretty. When the Ibovespa finally came back online, it tried to play nice. Even flirted with a slight gain. But by the end of the day, it fell 0.48%, closing at 132,437 points. Big names got hit hard. Banco do Brasil shares sank a painful 6.85% after weak profit results and geopolitical fears. Petrobras followed the oil slump and closed down too. Even with falling interest rates, which normally help, the market just didn't bounce back. And remember that blackout I mentioned earlier? Turns out the B3, Brazil's main stock exchange, faced a technical issue that knocked out the market data feed. No real-time price updates. No reference points. Just silence. Traders were left flying blind for hours. By the time the issue was fixed, the damage had been done. So here we are. Chart decreasing U.S. jobs, numbers disappoint. Money with wings, the dollar drops. Chart decreasing markets tank globally. Stop sign Brazil's stock exchange freezes. Fire chaos. Now, is this a turning point? Are we about to see central banks change their tone? Will interest rates actually come down in September? Nobody knows for sure. But one thing's clear. When payroll data speaks, the whole world listens. And this time, it shouted.